then we had this consolidation here, and then we had our M pattern with the breaking structure, and then a retest. We got the engulfment at 10:15 timing also, and that was the trade. Having an actionable review process is what separates professional traders from other traders. And in this video, I am going to show you my actionable review process, how I actually go through the trades that I took throughout the week. And let's jump into the video. So I address 4 things. The first thing is my process. I need to go through my process and look at my trades. Did I follow the process to the core? Number 2 is analyze the losers, because the lessons are in the losers. Number 3 is analyzing the winners, of course, but you won't be learning a lot from that. You'll just be solidifying what you're supposed to do to win. And lastly is look at the missed opportunities. What are the missed opportunities and why did you miss them? Oh, and I forgot one process. The last process is what to do next. So yeah, let's jump into the first thing. What is the process? My process is simple. Day 1, day 2, day 3 sets the high and the low of the week. Then we look for a breakout in the New York session between 8 and 11. Then we use the 1 minute time frame to look for reversals. Then of course we are looking for M patterns with break of structures, retest with engulfments, and yeah. So let me show you last week's trades. These are trades that we took with our students. So not all of them I traded them, but I record all the trades that my students take so that I can guide them into understanding the problems that they might have faced in the trades. So you can see gold gave us a beautiful setup, but we got stopped out. Alright, but we followed the process. You can see day 3 breakout in first hour. We have the pump, we have an M pattern with a breaking structure, engulfment, and yeah, the lesson is never take trade between 8:40 and 9:15, because that is when we have the manipulation time. If you get, basically for me, when I get setups between 8 and 9:30, I will ignore them. I like trading after 9:30. That way I know we have players, big players in the market. Now you can, looking at US 30, we followed the process exactly. Day 3 breakout in the second hour. If we have a breakout in the second hour, then we have a very high likelihood of a reversal pattern, and it worked. It gave us a nice 60 pips, 600 pips, whatever you want to call it, but we followed the process. Day 3 breakout. We had no setup in the first hour, so price continued pushing higher. Then we had this consolidation here, and then we had our M pattern with the breaking structure, and then a retest. We got the engulfment at 10:15 timing also, and that was the trade. Again, US 30 day 4, we had, of course, day 4 high of the week, and then we had the breakout in the first hour, and then the 15-minute time frame indicates that we will have a big reversal. So if we have a bigger picture time frame that is showing us a reversal pattern, then we know that day will be a big move day. So we had that head and shoulders pattern, and it closed below. So it closed with a breaking structure. What we will be looking now, this is the first hour. The second hour we will be looking for a pump to the high to stop hunt guys who went short early, and then align ourselves with the already now reversed trend. And as you can see, we had the breaking structure, the pump, breaking structure, retest, and we got our entry there. You can see we got our take profit. Price continued breaking down to, I think, the low of the low of the previous day. I don't really remember. Again, we look at oil. Oil gave us day 4 setup. We had a breakout. So this breakout, we had it in the first hour. Then we had a pump above the high of the week. Of course, that is in the 1 minute time frame. We had this pump to the high in the 1 minute time frame. Following the process, then we are looking for an M pattern. We got this M pattern here with the breaking structure, retest, and then we got the engulfment candle. And as you can see, we got a pretty nice trade setup there. Also, we learned that, of course, when you have a breakout without the big picture reversal pattern, then they might just be retesting that high to continue with the trend. So you must be willing to take money off the table, otherwise you will get stopped out. Again, looking so this was yesterday, Friday. Yeah, so this was Friday yesterday, date 1. We had the NFP yesterday, but of course we are following the process. It's day 5. We had the breakout of the high of the week in the first hour, and then the second hour gave us an M pattern with a breaking structure. So you can see here we have an M pattern with a breaking structure, a retest, but we have no engulfment. For the rest of the session, price does this thing. Well, it's gapping everywhere. So this is inconclusive. But if you actually try to use a brokerage chart, maybe, or MT5, I don't know about MT5, but I know some of my students had candles that were forming. So I like using TradingView because it shows me the most accurate presentation of price. So once I have my price on TradingView, I can now use my brokerage to execute my trades. We had no trade on oil yesterday, but Nasdaq gave us a very beautiful setup. So we have day 5, we have breakout in hour 1, of course, and then trap. We had the breakout in the first hour, and then we got a reversal setup between 8:40 and 9:15, which is our manipulation time. We are not taking trades there. We are waiting for 9:30, and at 9:30 we got a beautiful setup, a reversal setup that gave us an engulfment at 9. Well, it was at 9:33 there. So it was a beautiful setup for the breakdown. And lastly, we had the USD JPY. So it's day 5. It breaks out in the first hour, and then in the second hour we have the trap zone, where we have a beautiful reversal setup. But if it's in the trap zone, we wait for 9:30 to see how price behaves. So there's a difference between having a big move that in the reversal, in the first hour reversal, we have a big explosive move. When I see a big explosive move after that setup has been formed in the first hour, in my mind I know in the second hour price will come back to stop hunt guys who were emotional and took the early mouse buys. So price at 9:30 usually comes down. But yesterday we had a ranging market. Price gave us a setup, broke out, and then consolidated. So it gave us an opportunity to align ourselves with the trend, wait for 9:30 to give us a W pattern, which it gave us, and then broke structure, retested, and gave us an engulfment candle. So this is where the entry was for your 25 to 50 pip move. This is currencies, so there is not a lot of pips there. I don't usually trade currencies, but since my students are looking at all these pairs, I am looking at all of them so that, you know, we can be on the same page. So that is looking at the winners and the losers. Now there are some trade. So what were the losers? What did the losers have in common? Which is usually the first hour trades, of course. the manipulation time usually has very many losers, and then if you don't consider news, you might get stopped out. Last week we got stopped out on one trade because we never really took into consideration the news, or you have no conclusive data. That means when you look at TradingView, price, especially oil, likes to give you those dashes, gaps and dashes. But if you are using maybe a platform's chart representation or whatever, they give you full candles, which to me doesn't really make sense. How can you have one platform giving you inconclusive information while the other is giving you data that you're supposed to work with? So if my students got stopped out yesterday on oil because of that discrepancy, but yeah, that is something that the trades had in common. And what were the missed opportunities? That was in USD JPY. So since the price had moved so far, some of my students were unable to take trades because of course, the bigger stop loss. But we had not discussed the fact that when price consolidates rather than move explosively, you should be expecting, price to come back to a trend line, then look for an M or a W pattern with a breaking structure, retest and continuation. Anyway, so this is just me summarizing how I review my process. It usually takes some time to do all these things. I am just giving you an overview so that you can do it to your own trades that you took this week. So what do we improve next week? Of course, all trades are taken after the first hour closes. There are no first hour trades. When the first hour breaks out, then you should watch out for the price action in the 15-minute time frame so that you don't get caught in the wrong move in the 1-minute time frame. You get tunnel vision when you start looking at only one time frame. Right, again, watch out for news and avoid the setups that have no movements, or they are just giving you the dashes and the gaps. Scrap that trade. And yeah, so that's just basically what the review process is. Now, I suggest if you don't have a recording system like this is a very good recording system because of course it's in the cloud. You can access it in any computer. You can share it to anyone. Plus, it's easier. Now, I record all my trades on a manual book, but I also like to record it on Google Docs so that I can add in the images to complement the process. Anyway, if you got value from today's video, subscribe and see you in the next video. Peace out.